Welcome back to another episode, another podcast, Fiscal Crunch Time 2016. And I'm going to not tackle, but briefly address the cryptocurrency situation. Everybody, I'm saying everybody because most of them are people from my own family that are questioning me, asking me about the value and the efficacy of doing anything in one of these new currencies, quote unquote, that they're calling them. Cryptocurrencies are something digital, nothing tangible, nothing for real that you can hold in your hand. I am really cautious about these type of things because I can't suggest that you put your money into them. It's too risky. You've got nothing there. It's somebody figured out just to punch in a new chain link or a new situation on the computer. They got a new app, for example. Couple 100,000 new apps every single year of the year released, and thousands of apps downloaded from Android user to Android user through the course of a day. Same thing holds profit, of course, with a cryptocurrency. Now, physical precious metals and Bitcoin share some characteristics, but only in theory. Now, all of my subscribers to the podcast know that I am a stingent physical precious metals, gold, silver, platinum, palladium, rhodium. Neither is under the control of a central planner, an academic, favorite phrase, and their history of abusing fake money, fiat currencies, in the name of borrowing and spending without any limits. Think about quantitative easing 1, 2, and 3 in the United States, and Abenomics in Japan. They've been printing Japanese yen since 2013, 2014, and their economy is in the cellar. Now, both offer privacy advantages and a little bit of insulation from insolvent banks or unstable banks that are underpinning or holding up the mainstream financial system. The whole thing that we know, normal people that are not big in the financial industry or the financial marketplace, what we know to be normal, put your money in the bank, you get interest from the bank, is what I've been doing my entire life, man. That's slowly changing. We'll talk about that momentarily. Biggest thing is volatility. Think about volatility. To me, Bitcoin is a stick of dynamite that has been lit and is going to explode. For example, the values of Bitcoin fluctuate dramatically, sometimes in the same day. This infant of a currency has already been heavily influenced by scandals, such as the Mt. Gox situation that happened back in 2014, 2015, as well as other situations where big-time money investors do a website. Oh, you can make money with Bitcoin. Here, take my payment details, send me this, and you're going to make this, that, and the other. As soon as they make their money, they're gone. The tiny market for Bitcoin is prone to these huge swings. And there's a lot of competition in the marketplace as well. To date, right now, the 30th of August, 2016, there are 417 other cryptocurrencies. How do I know? I'm tracking it as well on coinmarketcap.com. I'm going to put the links up for you to do your own due diligence, and you hold me to the fire. And Like, tag it on YouTube or wherever you wish. If you find anything that I'm telling you that doesn't cut mustard with you. I prefer to avoid volatility in every possible, every I dotted and every T crossed in a sentence. I prefer to avoid volatility. I prefer to deal with things that can be not controlled, but the thing I can actually put confidence in. For example, physical precious metals, spot prices, the price of gold, silver, platinum, palladium, rhodium can rise and fall, sometimes very sharply, but 99% of the time, 99% of the time, you can see what's going to happen before it happens. Not these drastic swings from like a Bitcoin or there was Liberty Dollars and all these other things that had happened over the last 10 to 15 years. The number of ounces of gold, silver, platinum, palladium, or silver that you're holding in your hand or that you've got in your safe is not going to change, because that is an intrinsic value. It's been held as money down throughout history. Over 800 years of human history, back to biblical days, biblical times, gold and silver were of value. Richest Man in Babylon, pick up a copy. Very great read, very great book. If you adopt those principles, I will talk about those principles in the very next podcast. I'm going to make you that promise. I promise you that the one about Bitcoin and the other cryptocurrencies, next it'll be Richest Man in Babylon. The thing is, Bitcoin could become obsolete immediately, like all of these other flash in the pan, quick currencies that they've come up with over the last 10, 15 years. Like I just said, Liberty Dollars and eGold and the other. eGold, for example, their computer databases were wiped clean. So everyone that thought they had something in storage for them, they had a digital certificate of ownership of some gold bullion, but when they tried to call that in and get that gold bullion, all of the assets, all of the computers were seized, all of the servers were shut down, and I think it was the Customs and Border Patrol, I think, shut them down. CIA, I can't even remember. I'm digressing here. I just opened my email and the headline, this is really something special. Central banks have joined to beat Bitcoin at their own game. This is what the headline says. With a rival super currency. Now this is coming by virtue of my English constituency. Having a professional situation in Oxford at the university, Oxford OCV, Oxford Shenandoah Valley, I still communicate with everyone to keep the lines of communication open. You always want to keep an eye on your money if you have some there, you know. Computer scientists have devised a digital cryptocurrency in league with the Bank of England. They're calling the proto-currency an RSC coin, an RS coin. They're saying that it has vastly greater scope than Bitcoin, used for peer-to-peer transactions by libertarians across the world and beyond the control of any political authority. The purpose would be turned upside down. RS coin would be a tool of state control, allowing the central bank to keep a tight grip on the money supply and respond to crises. It would erode the exorbitant privilege of commercial banks of creating money out of thin air under a fractional reserve financial system. Quote unquote, whoever reacts too slowly to these developments is going to take it on the chin. They will lose their businesses. This is from Dr. George Danzazis, who's working on the design at the University College of London. He continues, my advice is that companies should pay very close attention to what is happening because this will not go away. Layers of middlemen in payment systems face a creeping threat across the nexus of commerce, stockbroking, currency trading, or derivatives. Many risks extension over time. Deep in the markets, there are dark pools buying and selling shares and entities that facilitate that foreign exchange. There are Visa, Master, and PayPal. They are the sorts of guys that we are going to disrupt. University College London drafted the plan after being encouraged by the Bank of England last year to come up with a radical design for a secure digital currency. Lord have mercy. The bank itself has an elite four-man unit grappling with the implications of cryptocurrencies and blockchain technology. Central banks at first saw Bitcoin as a rogue currency and a threat to monetary order, but they are starting to glimpse ways of turning the new technology to their advantage. My goodness gracious. I've said it before, I'll say it again. I think that it is high time to build up this thing, awake from sleep, and get into physical ownership, tangible possession, and capacity of gold, silver, platinum, palladium, rhodium. Things that have stood the test of time down throughout written history as money. Thank you for your time. Please make the right move. Please dream the right dream and continue to push forward.